First thing, before we get into this, okay, there's three things you gotta like keep in mind, okay, that call them like the holy grail of investing, okay. One is, if you're gonna have a successful stock account, you've gotta like put money in, right? Like you've gotta have money to put in to buy on dips, to buy stocks you love. So if you wanna grow to a large amount, whether it be 6 figures, 7 figures, like, you know, the amount of money you put in, important, right? Time is important. Now in this circumstance, we haven't had a lot of time to play with. Like a little over 3 years in the investment horizon perspective, that's a really short amount of time. Like usually if you're thinking about building out a portfolio, you're usually thinking about building it out over a 5, 10, 15, 20, 25 year span. This account still is a baby, actually. This is still a baby account. It's a little over 3 years old, okay? Like, you know, that's the best way I can describe it. Like when you talk about mature stock market portfolios, they're usually portfolios that are 10, 15, 20, 25, 30 years old, okay? This is a little over 3 years, okay? But time, super important, okay? And then the percent return you get on your money, super important, okay? These are the three everythings, okay? That's how you build a successful account. Now, you always pretty much need two of these things to, you know, get an account to a very good place, okay? What we've been fortunate enough to have, although we don't have much time, right? We've had money to put in, okay, and buy a ton of great stocks and build up positions, and we've gotten some ridiculous returns, okay? As far as the 1 year rate of return for the public account, and this is calculated by Fidelity Investments, not calculated by me just throwing out some number. This is by Fidelity Investments, okay? The 1 year rate of return for the public account is 91%. I'll even show you screenshots, okay? The S&P 500 is up about 9% roughly year to date, okay? So, you know, to say we're crushing the market would be, you know, a little, you know, modest. Let's just put it that way, okay? And then in 2019, we also got a 91% 1 year rate of return in 2019, okay? So the last few years have been amazing for me with just like a long list of phenomenal stocks, okay? And so we've been fortunate to have the money to put in the account to build the positions and getting ridiculous gains year after year, okay? But I mean, even if you weren't getting that good of returns, then you just need time on your side. But obviously not everybody has a million years, because I mean, a lot of you guys, I see it all the time, a lot of you guys look at it and you're like, man, 30 years from now, 40 years from now, 50 years from now, who cares how much money I have? I'm gonna be 78 years old if I'm even still alive, right? And so a lot of you guys wanna have money in your either 20s, but a lot of you guys wanna have money in your 30s, 40s, 50s, like when you can actually still enjoy it, and hopefully you're gonna be around to enjoy it, right? So those are the three amazing things you need in a stock market portfolio. And if you have those three things, like the world is yours when it comes to investing, okay?